Mortgage meltdown has some people choosing alternatives to foreclosures. Many are choosing what's called short sales. That's when the bank sells the mortgage property for less than the outstanding balance on the loan. It still affects your credit rating, but not the way a foreclosure will. Joining us now to talk about San Diego's real estate market and where it's headed is Robert Faher with Cambridge Home Loans. Bob, I think you told me I could call you Bob, so I will if it's all right.
Of course.
So where are we headed?
Well, mortgage rates, unfortunately, look like they're going to be trending higher in the second half of the year. We've seen some pressure on the bond market, which is typically the driving factor for interest rates, and that's fueled by inflation concerns. That's the sour news. The good news is that interest rates are fantastic right now. Home values are a bargain, and if you own a house and you don't have to refi or sell it, sit tight and ride it out. If you do have to sell the property, well, you're going to feel the pain. But the big winners today are those who are interested in purchasing a home, perhaps for the first time. And a clear indication of a buy signal is the fact that there's an awful lot of investors coming into the marketplace. Prices are down low, as are interest rates, such that it makes good economic sense for people to pick up some of these properties, rent them out, and wait out this current market.
Now, you've been in the business here locally for 30 years. I mean, these are cycles and trends that we have certainly seen over and over. Is this particular trend any worse or better than before? And do you believe we will come out of it?
Oh, clearly. If you take a look at history, and that's always a good indicator of what you might expect in the future, for me in my career, this is my third downturn in a market. I remember in '82 when we had prime rate at 22%. I remember in the early 90s when everybody thought that the Armageddon was about us. But if you owned a property or purchased a property anytime in San Diego since about World War II and held it for 10 years, the value of that home would have doubled. And that's regardless of when you bought it. If you bought it at the peak of the last run-up in values, arguably 1990, and you held onto that property 10 years, it would have at least doubled in value. And that is the historical precedent that I look to in feeling confident about the future. I don't see that coming back tomorrow. We're probably in this down to flat cycle for the next 3 to 5 years, but real estate is not a short-term buy and hold. It's a long-term proposition, especially if it's your home. You should think about the quality of life and not the investment.
How do you feel about the homeowners who are in crisis now, who need to sell, who are looking to alternatives for foreclosure that we were talking about earlier, these short sales? Is that a good option?
Well, it sometimes is the only option. They have to be very careful, and they should talk to their accountants. There is an inherent problem with a short sale with respect to a tax consequence. You have what's called the debt relief income, which means that if you have a property that was mortgaged, say, $500,000, and in a short sale it went for $400,000, you were arguably relieved of the obligation to pay $100,000 in debt. That income becomes ordinary income, and the lender will 1099 you for it, and you will end up paying taxes on top of losing your house. So if you can, the advantage that was created in the tax code and in the incentive for homeowners is to contact your lender and see if they will renegotiate the loan with you. If they do, based on legislation signed into law back in December of last year, you will be exempt from the debt relief income, and if the lender is agreeing to write it down, for example, to $400,000. But good luck.
Good luck is right. Robert Faher, thank you so much, and for putting this in historical perspective for us.
Thank you, Lydia.
All right.
Many